Hey guys, Max here, and this is your daily update for yesterday, the 24th of January. And wow, it was a crazy day. For anyone who follows me on Twitter, link down below in the description, of course, you saw the real-time crash as everything dropped and there was a sea of red. Only 4 prices to recover in the last few hours of trading and finish the day actually up on where they started. There are, of course, a couple other things to talk about as well, but for now, let's just get right into it. So stocks were crazy volatile, and what actually happened? Well, pretty much everything across the board crashed as the day started, and it all looked really kind of terrifying. The S&P 500 was down over 4%, the Nasdaq was down over 5%, the Dow Jones was down over 3%, but these dips weren't reserved for just US markets. The FTSE 100 fell 2.5%, the Stoxx 600 fell 3.8%, and the Nikkei fell just over 1% as well. Now, what was different for the US markets is that they rebounded, but overseas markets didn't. The FTSE actually closed down 2.5%, and the Stoxx 600 closed down almost 4% as well, so there was no strong rebound outside of the US. Of course, in the US markets, someone bought the dip and stocks shot right back up and pretty much everything closed green for the day. The S&P 500 was up 0.3%, the Nasdaq was up 0.6%, and the Dow was up 0.3% as well. Obviously, with this crazy volatility, we saw the VIX spike up to its highest point in over a year as it reached 37. Now, actually, back in December, just after the Omicron variant emerged and the markets had their little panic, we saw a VIX spike to just a touch above 30, and I basically said that volatility is here to stay and we're going to have some crazy times over the coming months, and we will see higher VIX spikes in the near future. The VIX will rebound back above 30 again, and that markets are just going to be crazy for a bit, and lo and behold, here we are again with the VIX spiking well above 30 yesterday. Now, as for other assets and markets, how they went, well, there wasn't actually too much going on outside of crypto. Foreign exchange rates didn't really change much at all. Bond yields stayed pretty consistent with no major changes either across the board. And WTI oil is still sitting above $84 a barrel, so still at very high levels. Gold did have an interesting day. It rose slightly as the rest of the markets crashed, and then as the risk on assets recovered, gold eased its gains and fell, ending the day pretty much exactly where it started. Now, gold is actually looking more and more interesting to me, and it is starting to make up a part of my strategy going forward. Now, in the crypto markets, there was another crazy volatile day, as is all too common, and unsurprisingly, we saw the exact same thing happen with crypto as we saw with US equities. We saw a crash as the day started with some pretty low lows. Bitcoin touched the $32,000 range and Ethereum touched the $2,100 range as well. Altcoins were all telling pretty much the same story, seeing drastic declines of 10% for the most part, but then as the equity market turned around, crypto followed and rose with it. Everything saw some buyers enter the fray, they bought the dip and pushed prices back up above where they started. Bitcoin is now sitting at $36,000 and Ethereum just above $3,400, so a solid 4 and 5% raise for each of those respectively. The less popular altcoins all did the same thing, with most rising somewhere in the region of 3 to 8% for the day, rebounding just like the high-risk tech companies of the Nasdaq. Now, that was obviously a crazy day. It was very volatile and there was a lot of fear going about. But why did it all happen? Well, sadly, the cop-out answer is that we don't really know. It mostly seemed to just be investor sentiment playing off of investor sentiment, everyone getting themselves into a frenzy and selling their positions before the opposite happened, where everyone again got themselves into a frenzy and started adding to their positions. Now, I do feel the need to clarify just how big this rout was. It was the largest single-day dip for the last 2 years, only beaten by the original COVID crash where markets nigh on dropped 50%. There also didn't seem to be any specific catalyst for this flash crash. There weren't any missiles fired from Russia to Ukraine, the Fed didn't come out and say they're hiking rates to 5%, and there wasn't an obvious trigger for all of this as a whole. Of course, there are the usual fears surrounding the Fed: monetary tightening, the end of quantitative easing, interest rate rises, and even the Fed's balance sheet being sold off, but there wasn't a specific piece of new news regarding this. Again, there are the usual fears surrounding Ukraine, and while the situation doesn't exactly seem to be getting better, it isn't exploding into conflict or anything like that either. The closest thing to developments in these situations is the fact that on Wednesday we will get some news out from the Fed, and we should find out the direction they're going to move in. Now, we did hear just a little bit from Ukraine. We heard from NATO and that they're going to boost deployments in Eastern Europe, with 8,500 American troops being put on high alert. Again, for the Russian shills down below, that's less than 5% the number of Russian troops sitting on the Ukrainian border. Now, it is probably going to be a very busy week for finance. The IMF is coming out with their World Economic Outlook update today. We get some more consumer confidence reports from the US out today as well. Wednesday, we get the Fed monetary policy decision, which is probably going to be absolutely huge. We get US jobless claims on Thursday along with GDP figures, so that could be a big day as well. And then on Friday, we get consumer sentiment data along with consumer income data, which again is going to be really important when trying to work out the direction the economy is going in. Now, there are some loose theories to explain what happened in the markets yesterday, though again, no one is really sure for 100% why what happened. Now, the first idea that I've seen going around is that retail investors panicked and sold everything, and then institutional investors were able to see through the smoke and mirrors, and they bought the dip and forced prices back upwards. Now, of course, that is possible and plausible even. Retail investors do have a tendency to panic, especially when markets dip, but I haven't seen any actual data to prove that this is the case. I also think it's worth saying that if this is the case, then it's probably just a dead cat bounce. We shouldn't expect this singular rally to become the trend for months to come. And another caveat on top of that, literally everything in the markets right now is entirely dependent on what the Fed does and what it says as well. Now, I did see one person claim that the Fed bought the dip themselves and just bought up all the equities on the market, akin to what the Japanese central bank does. But again, there is no evidence to support this, and it's very, very, very unlikely to be true. One likely reason for this dip and recovery is that this could be the result of algorithmic trading. There are millions of computers trading around the world at any one point in time, and lots of them are set up to buy the dips at certain points, and it's absolutely possible that this rally was turned around by some trading bots. Now, at the time of making this video, futures are down by quite a lot, over 1% on both the Nasdaq and the S&P, and it's probably going to be an interesting day, and if it isn't, then tomorrow when we get the Fed's decision, it definitely will be. Now, for some normal news, we have Biden feeling the pressure of inflation and forgetting how microphones work. He was having a quick little press conference, which he really doesn't do all that often, and a journalist from Fox News asked him about inflation and whether it worries Biden because the midterms are coming up. Biden basically responded by calling him a stupid son of a and saying that inflation is a great asset, probably sarcastically. Now, Biden's approval ratings are at rock bottom, and almost no one thinks he's actually doing a good job, and that's for good reason, as inflation is incredibly impactful for the average American, and Biden has utterly failed in keeping it under control. Along with the Fed, of course, they've actually been stimulating inflation for far too long now. He is feeling the heat, and we've seen him get annoyed with people who disagree with him in the past as well, so this really isn't too surprising at all. The funniest thing about all this is that a few years ago, Trump also called a reporter a son of a, and the leftist Twitter sphere, their mob, screamed that this was an attack on free media and democracy, and now those exact same people are applauding Biden for doing the exact same thing. I'm going to link a Twitter account down below that documents these type of things. It's absolutely hilarious and points out the hypocrisy of thousands of journalists and politicians constantly. Now, Ray Dalio is in the news again. He just can't seem to keep his mouth shut, and this time he's claiming that the US is in decline as China rises. Now, this is no surprise at all. We've heard it all before from Dalio. He absolutely lacks a moral compass and has seen fit to align himself with a murderous genocidal regime. Why does he do this? Well, the Chinese Sovereign Wealth Fund is probably his largest single investor for his hedge fund. He has quite literally been corrupted by money. He spouted a bunch of nonsense about common prosperity in China, seemingly ignoring the fact that none of the money seized by the CCP is actually going to the poor of the country, and he's praising their economic growth as the US stagnates, while the country is in utter turmoil as its property industry collapses right in front of us. Ray Dalio literally has no credibility anymore. He is a coward, he's the modern day equivalent of a Nazi sympathizer, and the sooner he disappears into obscurity and resigns himself to his deathbed, the sooner the world will be a far better place. Now, speaking of China, the country has kicked off fresh efforts to regulate online content as we near the start of the Winter Olympics. They've been cracking down on rumours and celebrities who aren't quite as good at keeping their mouths shut, much to the CCP's dismay. Of course, free speech isn't even remotely a thing in China, so this isn't a change of heart from the CCP by any means, but it is just one example of the country getting more and more authoritarian and slowly eroding away the human rights of its citizens. Of course, no surprise here, but Dalio doesn't care about any of this. As long as he gets his blood money, he's happy and able to sleep at night. Now, Nvidia, obviously the huge tech company that has exploded with popularity and growth over recent years, is apparently going to walk away from its purchase of ARM, a semiconductor manufacturer based here in the UK. This purchase would basically make Nvidia the single most powerful chip manufacturer in the world, and pretty much every authority is worried about the impact it would lead to, as the company would get just a bit too close to being a monopoly. The deal has now been in the works for over a year now, but it hasn't really been progressing on these regulatory fears, and apparently Nvidia is preparing to just walk away from it now. Now, this really isn't too surprising. There have been problems with this deal for months now. The American, Chinese, and British authorities have all expressed concern at this takeover, and a similar takeover by Qualcomm a few years ago also failed for similar reasons, so this has all been a long time coming. Now, that is it for the day. I will see you all again tomorrow. I have started working on the Coinbase video for everyone who's been asking for it, and that should be out in a day or two. I've also been thinking about making a video just briefly looking at Meet Kevin. He's obviously a huge financial YouTuber. He gets crazy views and is probably the biggest in this industry. He's a well-known bull and tech fanatic as well. In the past, he's fallen in love with companies like Tesla, Peloton, and Pinterest, but just the other day, he sold out of almost all of his stocks, which is literally a 180-degree turn for him. So I'm thinking about putting together a quick video just looking at what he's doing, what he's saying, and why. Let me know what you think about that down below. Now, if you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio, and buy and sell alerts for all my own investments. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stable coins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.